So we're currently looking at Chewy stock today, $38, $15 billion valuation. They recently just posted earnings, which was really good, but the stock is only up 12% year to date. After they posted earnings, it dropped 17%, overreaction of course, but ever since the past week, it's up 10%. The most recent report exceeded analyst estimates. Let's pull up the sheet real quick. Quarter 2 2025 revenue was 3.1 million, up 8% year over year. Currently sitting on 8 consecutive quarters of total revenue growth, beating high end of the guidance. Now, a lot of that revenue is because of this auto ship and save. No fees, always flexible. So the auto ship subscription program that they started doing now accounts for over 83% of total sales. 83% people ordering food on auto ship. It's growing 15% year over year. They have currently built a predictable revenue model now. Go over the earnings per share. So earnings per share, they posted 15 cents, down 78% year over year. What happened there? Let's see what happened there. So basic earnings per share decreased 55. So resulting in a 275 million tax benefit. This is why earnings per share is down. The company had a huge tax benefit of 275.7 million. So this giant tax benefit made their income look way bigger, much bigger than normal, which boosted earnings per share last year. That's affecting the second quarter of last year. And so this year they didn't have that one-time boost. And so the latest earnings they posted was just from normal business. So that is why earnings per share looks lower in comparison. Think of it like this. Last year, they got a giant coupon from the IRS, which made profits look amazing. This year, no coupon. So earnings per share down 78% year over year, even if the core business hasn't gotten worse. As of right now, Chewy appears well positioned to continue growing in the expanding pet care market. Profit margins have been pretty stable, around 29-30%. Free cash flow per share and cash flow from operations, 4 consecutive quarters of year-over-year growth. So I have some notes right here. So the active customer base grew to 20.9 million, a 4.5% year-over-year increase, while the net sales per active customer reached a record of $591. That is up also 4.5% year over year. So this metric is important to watch because it shows Chewy's ability to extract more value from customers, and it shows how the existing customer base keep purchasing stuff through cross-selling or increased engagement. Let's go back to the margins real quick because they are producing some pretty good cash. So 30% profit margins, and the main drivers of the margin growth: fast-growing sponsored ad business, favorable mix into the premium categories. They have pet prescription, health services, Chewy vet care, compounded medications, Care Plus pet insurance and wellness plans, the vet care. So this Chewy vet care is one of the newest innovations that they have. Let's see, so it's on track to open 8 to 10 new practices in 2025. In-person visits 6 days a week, 24/7 virtual health guide. So this services section, Chewy's health segment, continues to become the fastest growing part of the business. When we go over to the balance sheet real quick, total cash, almost to $600 million in total cash with no long-term debt. No long-term debt? That's really good for this company. They do have a competitive advantage. This auto ship program with 80% contributing to revenue creates a powerful moat for Chewy through customer stickiness and a predictable revenue stream. Pretty much offers reduced customer acquisition costs, higher lifetime value of the customer, predictable cash flows, and operational efficiencies. And people that are enrolled in the auto ship program do get giant savings, discounts, priority access, creating a value proposition that encourages more loyalty. And right now, Chewy's only sitting at a $15 billion valuation. The stock at $118 back in 2021, so it's down 67%. There hasn't been any insider buying, but they've had a lot of analyst upgrades. Looks like institutional ownership kind of dropped off a cliff right here. I don't know what happened there. We'll have to take a deeper look on that one. But this stock does look like a compelling investment opportunity. Again, quarter 2 was a super strong quarter for them. Expanding margins, strategic initiatives. They have a stickiness product. Positions Chewy well for continued outperformance. And right now, the combination of strong fundamentals, lots of cash, no debt, growing free cash flows, new venues, new veterinary services, expanding market opportunity, and proven management execution. I mean, it's looking like a pretty good company to invest in. I would say this is more suited for investors who have a medium to long-term hold on companies and investors who want to wait for the ongoing transformation they're currently doing right now into a comprehensive pet care ecosystem. So, just a quick look, guys. Let me know what you guys think on this one. $15 billion valuation at $38 Chewy. Let me know what you guys think. Thanks for watching the video, and I'll see you in the next one.